Hello, my friends. Welcome back. Hey, look, if you're anything like me, you probably want a little bit of diversification in your portfolio while also looking at some good dividend yields and long-term returns. So look, whether or not you're in the USA or somewhere else in the world, I think this is a really interesting company for us to look at today. It's got some powerful long-term growth opportunities here that I think we could capture at a good price at this point in time. There are some interesting risks and things to look at as well. I'm going to be going through this very quickly today with a more in-depth coverage to come later, so stick with me, my friends, as we get into it. Okay, Teleperformance, a small name and a really powerful big business here. So a really important thing to see this is we've got almost 500,000 people here, employees here. It's a digitally powered business services is what they offer. So they really, if you think about outsourcing different parts of your company, different parts of your business, different parts of the services, both internally offered to your own employees, as well as potentially to your customers as well, so front office customer care, or your back office functions where you're supporting your own organization. This is a company that can certainly help you out. And so I think the global reach with the local expertise, and I think as we look through here as well, we can see a huge number of countries that they operate in, as well as a huge number of countries that they are serving. So they've got amazing facilities, an amazing company here, and industry-leading solutions here as well. And they've been recognised, I think, as a global leader in what they do. So let's have a look at some of the financials here and understand whether or not this could be a really interesting opportunity. One thing to note as well, this is if you're in the US market or investing in US stocks, this is an ADR, American Depository Receipt. So it's not a stock holding per se. You will be charged a small ADR fee for holding this. So I've looked here at the TLPFY on the US stock exchanges here. Now a couple of really important points. This orange line has grown, this earnings line has grown over time. It's growing quite strongly in 2021 and in 2022 with a very strong increases here expected in the coming years. And that, my friends, is very attractive. We can also see it was powerfully, priced here as well at 47 times price to earnings. It's now decreased very strongly over the last year for several various reasons, now down to only 12.77 times on a price to earnings level. Now, what's going on here? Well, we've got a 2% dividend yield. We've got a BBB credit rating from S&P as a company. We're going to have a quick look at the analyst scorecard here. So a pretty mixed bag. They generally seem to be reasonable, forecasting out 2 years ahead of time with some beats, most of the time hitting it and occasionally missing it. Now the misses were in 2020. I think that's probably pandemic related, in 2011, which was a reasonable period of time ago as well. So I think we've got some reasonable analyst forecast accuracy here as well to draw on, particularly 2 years forward. Now I do want to then quickly switch over to the forecasting calculator. Now I'm going to take the normal multiple, which has been 29 times. I think that's a little bit absurd. We're going to switch over to the estimates here using a price to earnings equals growth. So the Peter Lynch's approach here, and that gives us a 17.8 times. And I think that's reasonable. I don't think that's very demanding, and particularly given the very strong growth that we're seeing here, estimated growth from the analysts of 40% in 2023, 11% 2024, and another 11-12% in 2025. Now we've got reasonable numbers of analysts covering the stock. If we look here at the analyst estimates for earnings, they've been revised fractionally upwards, fractionally the same over these 3 years. So I think we've got fairly stable earnings, which is one of the things that I do like to see. And if by the end of 2025 we get a price increase here that takes us back to a price to earnings multiple of 8.8 times, and the analysts have the estimates right for the earnings and the company manages to achieve those earnings, we'll be looking at a total rate of return of about 121%, or an annualized rate of return of about 35%, which I believe is very achievable. I don't think this is too demanding at all. Now on top of that as well, we've got some fairly nice dividend distributions here as well, with some dividend increases coming through. Now I'm just going to switch over to the performance here. We've seen in the past dividend growth rates can be quite strong, although it is very lumpy as well. And if we look from 2009 to today, in comparison to the S&P 500 index, slight outperformance here with roughly the same level of income. So bought at the right time, I think it's got some really good opportunities here for us as well. Now, another thing that we can look at in terms of the forecasting is I'm just going to also, just instead of earnings, I'm going to have a look at sales to see how the sales have been tracking. The sales have tracked in a very, very steady increase here as well. The analyst scorecard, I assume, is going to be pretty good, and it is. A very, very stable analyst forecast here. So if we switch over to the forecasting calculator and we stick with sales, and we look at the normal multiple here of about 2.24, or the more conservative estimate here of 1.5 times sales. We can see the sales have been revised upwards over the last 6 months by analysts. And if prices return to this multiple and the analysts have these sales estimates accurate, we would expect a total rate of return of about 70, just under 70%, or an annualized rate of return of about 22%. Now, I think this is a more reliable estimate than the estimate based on the earnings. The sales are going to be more easily estimated, and they're much less likely to be as volatile as the earnings. So I think this is one that we could probably bank on here, a total annualized rate of return of about 22%. So, my friends, hit me up in the comments down below. What do you think? Is this an opportunity that's going to be a good fit within your portfolio? Does it tick the boxes for you? And if not, why not? Let me know. I'm very keen to hear your thoughts, even though it is quite a low dividend yield stock with quite a lumpy overall dividend growth rate. I think this is one that has an exceptional opportunity here for us today.